Morning.
Hey Gav, how are you?
Very strong open this morning.
Really is, yeah. I think the world of Trump, we get all the panic and fear and threats early in the week, and then he sort of talked it back in front of world leaders at Davos. So maybe didn't like having to speak in front of them all. It's a bit easier to type it on Twitter than actually speak it in front of world leaders. That could be the issue.
Yeah. So what do we got? Venezuela, Greenland, and he's picked a fight with the Fed chair, and it's only the 22nd of January, so it's going to be an interesting year.
It certainly is, mate. Certainly is. Well, the market's obviously recovered quite a bit from the last couple of days of weakness. It was interesting. We saw resources sort of remained reasonably firm over the early part of the week. It was really our financials and I suppose the broader market that suffered a little bit of selling, but they're back into the market today. But we're up 60 odd points at the moment, and again, resources are strong, but we are seeing some buying back in financials, which is good to see for the broader market.
Yeah, some of the technicals for the resources are starting to look a little bit toppy, so it wouldn't surprise me if you saw a little bit of profit taking pretty soon. And but I think overall for the next 12 months, they're still going to be strong, but yeah, looking a bit toppy at the moment.
Yeah, I did see a couple of reports out. I think Rio, there's a few people saying maybe it's time to lighten on Rio.
Yeah.
And definitely, I think our suggestion of covered calls over BHP was a great strategy. Fortescue also had some production numbers today, and it's fallen away about 1.5%. The numbers looked very good, but I think when you're sort of getting priced a little bit almost for perfection,
Yeah.
the market has to take a breather at some stage. So
Yeah.
something to watch.
Yeah.
So let's get
Yeah.
into the stocks we're going to look at this week.
Right, I'll just bring up the screen here and get it all set up, and away we go.
Yeah, no
So
worries.
I was going to talk about James Hardy. So with there's talk that Trump's going to come out and announce some sort of housing stimulation in the next little while,
Yep.
particularly as he leads into his midterms. You'll want to hang on to his majority, so you'll probably splash a bit of cash over there at some point soon. I think James Hardy is a real beneficiary of that. We did recommend it late last year, and we did have another number of clients take that up.
Yep.
But you could look at this a couple of ways. So if you did buy it back in sort of late November, it's gone from around that 16 mark up to the 23 odd mark. So you could certainly, or sorry, I can't see the numbers are a bit small there, but you could certainly look to sell calls if you did buy it way back then. Or you
Yes.
could, and there's some really good premium on that. And I mean, you're only looking at 3 or 4 weeks and you're going to be getting $1 of premium per share. So that's pretty handy. If you
Definitely.
hadn't bought it, it's still going to be looking pretty attractive around that 32.50 mark. You're going to get about 80 cents of premium for selling puts, which means you're going to be buying at about 31.80, and even around that price over 12 months is going to be pretty good. So this is one of those ones, depends on your portfolio. It's not an easy one-way direction on this one, but there's certainly a couple of ways you could look at doing something with James Hardy at the moment.
Yeah, like selling that put to pick up that premium looks like a pretty attractive trade with that bullish sort of feel we have with possible policy changes in the US. So I think that's a great one. And if you, as I said, if you get exercise enough to buy them, 31.80 odd, probably an attractive level to own the stock at. They report, I think, mid to late Feb, and obviously it'll be interesting to see what the US housing sector is doing, and hopefully that any stimulus that is announced will be very positively received. So one to watch for sure. And I definitely like the stock for some upside. I thought it got pretty cheap under $30. So I think it probably is a $38 to $40 stock. So I think you got some good calls there.
Yeah, I mean that's I've actually got the US James Hardy chart up there, but I think it's trading around 34.70 when I last looked. So
Yes, yeah.
premium both sides on this one. So yeah, certainly one you could, depending on where you sit with it, something you could certainly trade. Oh, and
Yeah,
you're
excellent.
looking at QBE.
Yeah, look, QBE is an interesting one. With all the bond market issues this week, with concerns over Trump's, threat of an invasion of Greenland or a military takeover, that caused a lot of concern in the bond market. QBE, and as most insurers do, hold a lot of US bonds for their so their premium. They generally hold that there for investment returns. So when bonds were falling, obviously that wasn't great. QBE is back up a little bit today as things have probably settled back down in the bond market. But the big thing that I thought was very interesting is QBE have actually launched a new business, a reinsurance arm. It's called George Street Re. Obviously, they've got an office in George Street, Sydney, so very inventive naming. Um, and look, the positive things that I'm reading in it is it could add between 3 and 4% of gross written premiums annually. So that's pretty solid for QBE.
Yeah.
It's all being funded by external money. So does look pretty attractive, and it's something that we've liked the stock for a long time. We
Yeah.
feel when it gets under $20, it is pretty attractive to buy.
Yeah.
It's at 19.80 on at the moment. Definitely, I think worth having a look at. Targets around 22.80 was about the consensus at the moment. There was some fresh research out this morning supporting that target price. So and I think it's one for clients to definitely look at. If you buy the stock sub 20, you can always look at writing some calls when it goes back above 20. So one I'm definitely keen on. So yeah, I think that's a good story.
Yeah, no, I totally agree. And Suncorp's probably a similar type story, but QBE stands out at the moment.
Yeah, I think QBE, just because of its big bond holding in the US, I think is one that really got hit a little bit harder
Yeah,
than Suncorp. So
yeah,
I do think it's probably the play for a reversal in these bond price falls, but also for this new business and generally just a pretty solid market consensus view on the stock.
yeah,
So it'd be my number one pick in the sector. Then I do like Suncorp, but I think QBE is the easier play
yeah,
for our clients.
yeah, great. Nice one.
All
That's
right,
it
mate. Well,
for
that's
this week.
probably it for this week.
Yeah.
Yeah.
And I'll catch up again next week. Thanks, H.
Right. Have a good one. Thanks,
See you
Gav.
later. Bye.
See you, mate. Bye.